Let's do one thing. Let's talk about some earnings now. Minda reported a very strong performance. It is one of the strongest stocks in the auto ancillary space. A healthy surge in revenues and profitability. Their margins contracted a tad bit, but the company has received new orders having an annual peak revenue of 250 crores from the EV space particularly. Sunil Bohra, the group CFO at Minda, joins us now to talk about that. Sunil, hi. Always great speaking with you. In 9 months of FY24, the revenue growth has been 23% now, and you're sitting at a little above 10,200 crores. Can you tell us what is the expectation for the full year and what are we looking at in terms of FY25 growth?
Yeah, Sonia, thank you very much. So in terms of full year, we are expecting the momentum to continue, and if everything goes well, we should be in between 13,500 to 14,000 crores of consolidated revenues. But if you see at a group level, we are much more. So our group level, our last quarter revenues were roughly 4,500 crores. We have some joint ventures because of which revenue does not get consolidated. So that's why what you see is what we have majority subsidiaries and majority control of the board. But there are some entities like TG, Denso, etc., where the revenue is not part of top line. So we are seeing a very healthy growth, and this year, as I said, 13,500 to 40,000 crore of top line for the group consolidated numbers, and overall maybe around 17,000 crores of top line. Moving forward to next year, as you know that Sonia, we normally don't comment on annual numbers because large part of our revenue, almost 92% of our revenue is linked to the OEM revenue, which is the line fitment, and our destiny is linked with the industry volume. So we normally don't comment on the industry volumes, but our endeavor continues to be whatever industry grows, how do we outgrow the industry by at least 1.5 times over medium to long term. In fact, if you see past many quarters, many years, we have done much better than that, and hopefully we should be able to continue that in the near future as well.
Okay, so you're saying that 13,000 to 13.5 to 14,000 crores of consolidated revenues by the end of FY24, and you'll outgrow the industry by 1.5 times in the medium to longer term. Got it. This quarter, your margins contracted a bit, but this was also because of the ramping up phase of your new facilities. Do you stick to your guidance of 11% margins in the near term, and is that your outlook for FY25 as well, or do you think you have more margin levers?
Absolutely, Sonia. We are sticking to our annual guidance of 11%. In fact, for 9 months also, we have delivered 10.9, and hopefully, if everything goes well, we should be touching 11% on a full year basis. And even going forward in the near term, we are sticking to our target of 11 plus minus 0.5%, and with a bias towards a little bit of positive in the medium term.
Sunil, hi, morning. I just had a slightly broader question before we get into individual segments like lighting, etc. And as we discussed this earlier as well, there is some, while the road to electrification is inevitable, it's what's going to happen. But along the way, there are going to be speed bumps. We had the largest, pure electric vehicle maker in the US slowing down once again. I'm talking about Tesla. Some of the European EV makers are also starting in conference calls, etc., starting to talk about how growth is plateauing out a little bit. Is that having any impact on visibility for you, or not at all?
So, Prashant, as you know, that large part of our businesses are agnostic to the vehicle engine, whether it's ICE, hydrogen, EV, whatever, right? You have seating, you have switches, you have lamps, you have wheels, you have blow molding, airbags, infotainment, etc. So a lot of these products you need irrespective of the energy vehicle runs on, right? And on top of it, we have built a EV component profile specifically targeting two-wheeler and three-wheeler segment. And we are not yet have a clear strategy communicated on what we are going to do for PV, which is in the works. So as of now, two-wheeler, three-wheeler, we are still continue to be bullish. And if you remember, in May, our penetration for EV two-wheelers was specifically roughly 3.5%. There was a dip because of the drop in the FAME subsidies. But again, markets have picked up. And last quarter, we are almost around 4%. And the direction looks positive because a lot of our customers who are working on launching EV two-wheelers in the next 12 months, we are quite optimistic that it might actually be a very aggressive growth as we move forward. Little different maybe from the PV segment, because as of now, we all know PV is not that much entrenched into EV because the volumes are roughly 70,000-80,000 cars a year. So there, I think there is a time to go, but we are actually very bullish on two-wheeler and three-wheeler segment. In fact, three-wheeler is even doing much better than two-wheeler, you know very well, right? It's almost 30-40% penetration.
All right. Hi, Sunil. Good morning, and always good to see you in. And we've got a couple of numbers from you this time around. So clearly, business is in an upswing, and you're sounding far more confident. Let's focus on a couple of segments then. You know, your lighting business out there, I think you're doing currently around 850 crores on a quarterly run rate, and you're aiming to double this. Tell us on a yearly basis, how do you see this trajectory move? And also on seating, roughly, you know, if I annualize the number, you're doing around 900 to around 1,000 crores, but you want to get to around 1,500 crores. That happens in the coming fiscal itself?
Yeah. So two questions. One is lighting. Definitely, we are working on very, very aggressively on our lighting segment, specifically on the PV segment. We have last year commissioned our new plant in Gujarat. We are currently in the construction phase of our new plant in Pune. So lighting as a segment, specifically for four-wheeler, we are very, very bullish. We are looking at market share gains moving from 14-15% to almost 18-20% in next 4 to 5 years, coupled with the kit value growth, which is significant when you move from halogen to LED. So we are looking at multiple times growth in next 5 years in the lighting PV segment specifically. And in seating, we have given target of 1,500 crore revenue doubling in FY26, which was 5 years from the acquisition. But we are working to see how we can prepone that. There have been some headwinds in terms of the exports. There have been some small softening in exports volume and also some stabilization in CV volumes. If everything goes well, definitely we are looking at maybe hitting that target 6 months before our committed timeline.
Okay, that's very interesting. You're saying the lighting segment market share will go from 14-15% to 18-20% in the next 4 to 5 years. Nigel also asked you about the revenue run rate, right? You're now sitting at 800-850 crores. Just for in the last 2 quarters, you've sort of scaled it up in the lighting business. Is there possibility to scale it up to perhaps 1,000 crores per quarter as well, given the kind of momentum that you're seeing? And if yes, by when?
Absolutely, Sonia. It can actually be more than 1,000 crore run rate, maybe sometime in the next quarter itself.
Okay, more than 1,000 crore run rate in the lighting segment in the next quarter?
Next year.
In the next financial year. Okay, got it. I also wanted to talk very quickly on the EV business because, you know, your EV run rate has also gone up. I think a couple of quarters ago, you were doing 60-80 crores. Now, per quarter, you're doing about 160 crores of sales to two-wheeler EVs. Is there scope to take that up to 200-300 crores in FY25?
A lot, Sonia, depends on the volumes of EV because this market is still in the nascent stage and it's stabilizing. Even everybody is looking at what is going to be a USP. But if you see from Minda perspective, our as I said a little while back, the EV revenues of two-wheeler is roughly 4% of the industry volumes. Whereas if you see from our perspective, our revenue is in two-wheeler segment is more than 10%. That clearly depicts our ability to put more components from EV perspective, EV specific perspective into our customers. And that's how we are seeing that kind of outperformance and the significant growth we have. And if everything goes well, the numbers you spoke about, hopefully we should be able to touch in the next fiscal year.
Okay, we'll leave it at that. Sunil, thanks a lot for joining in. Your optimism sort of is coming through the screen. We can see, we can see the numbers as well growing quite a bit. So all the best for the future. That's Minda, very strong numbers coming through. And their guidance, they're very bullish on the lighting segment at the moment. They say they'll outgrow the industry by 1.5 times over the medium to longer term.